when we look at our clients, they fall into three groups. There's the absolutely not group, which I think is sort of related to geopolitics, obviously mostly from the US. Then we have the maybe, watching to see, how's the economy doing. And then thirdly is the yes, which is mainly clients from the Middle East who, are slightly rebalancing, perhaps, don't want to take sides. The US is no longer such a big customer of Middle Eastern oil, and so trying to rebalance their investment portfolio. So we're seeing money coming into China. Obviously, in public markets, money can come back very quickly, as we saw. The rally was very fierce. On private markets, I think it's slower because a lot of investors still have money tied up in investments. There's been a lack of IPOs, a lack of M&A. So I think it was encouraging today to hear Mr. Wu, the head of the CSRC, talk about pushing more IPOs and unlocking more M&A activity. So let's hope.
PAG is focused on rising private consumption in China. You guys recently led a consortium to take control of Dalian Wanda's shopping mall unit. What is the appetite for investing in China? What opportunities are you seeing? What are you looking at when you're there?
So we're sort of active in two main areas currently. On the public equity side, where we launched a sort of long-only fund. We felt the valuations were cheap, and that on a sort of medium-term basis, we thought it should be an interesting, probably more upside than downside. We're active on the hedge side, we on equity long short, also on convertible bonds. I think that the hedge strategies have worked well all the way through, actually, where we're not taking a sort of directional stance. And then on buyouts, we're active. Obviously, the Wanda case, which was actually the biggest ever buyout in China, which was recently closed. We think valuations are reasonable. There's a lot of good companies. Financing is now cheap onshore. I think that probably was the largest ever sort of domestic RMB financing package for a buyout. But of course, we have to think about exit risk. That's the one area we constantly debate. But in terms of good cash flowing companies at reasonable prices, we think it's interesting. It's worth a look.